Hey guys, doing here once again. Taking a look at another currency pair today. This one is going to be on the Swiss franc Japanese yen. As you can see here, we've been in a very strong uptrend with this pair for a very long time, almost 15 years. The market eventually formed these two trend lines, the outer uptrend line and the sharp inner uptrend line, to define the direction of the pair over the last 15 years. Most recently, as you can see by zooming in and taking a closer look, the market rallied sharply in within the context of the situation surrounding the Swiss bank, the Swiss National Bank earlier this year. And since then, the market has pulled back and essentially started to move sideways with these waves of uptrends and downtrends that has taken us sideways towards this uptrend line. Now, zooming in even closer, we can see that this recent downtrend has actually led to the break of this uptrend line. So right now we are at a situation in which the market could either U-turn at this area here and break this counter trend line to continue the breakout below this trend line and continue the downtrend, or we could actually see the market break above this downtrend line here and resume the overall bullish direction. Now let's take a look at what could be the bearish scenario, given the fact that we're still below this downtrend line and we have already broken this trend line, and well, just gonna take a look at the scenario that appears to be the more dominant one, which is the bearish downtrend. Now, as you can see here, this is a fairly strong pullback and a fairly strong setup. When we're looking at the possibility of a major trend line being broken, the setup at the candles and the setup need to be strong. So here we have a strong set of candles and a fairly strong counter trend line. But one of the problems with this trend is that even if we see a strong break below this counter trend line to indicate the possible start of the continuation of this trend below the uptrend line, there's another element of this downtrend that might prevent that from actually taking place. This has to do with the fact that we've had several waves already as part of this downtrend, and according to the rule of the market, whenever the market has produced a certain number of waves in an existing trend, it eventually becomes volatile and starts to move sideways. So right now we're actually at the limit of those number of waves, and we could actually see the market produce a set of movements that lead to a sideways pattern instead of a break of this counter trend line. So that is why this has a very low probability, or rather the probability of this actually leading to a successful breakout bearish is much lower than it would be otherwise in another scenario. The reason for this is the fact that whenever we have trends, the market will eventually come to a temporary end when a certain number of waves have been hit. Whenever that takes place, it becomes dangerous to enter the market at that area, despite the presence of a fairly strong signal to indicate the continuation of the trend. But what usually happens is that following that signal, for example, following that signal, so that indicates that the market is going to continue in the same direction. The market could then U-turn and then produce an opposing wave as it then starts to move sideways and form a consolidation setup. So that is one of the possibilities that takes place at these areas here when the market has exceeded a certain number of waves. So that is what is possible at this area here, and this is why even though we might see a break of this counter trend line, the market could actually enter into a period of sideways movement and lead to losses for persons who would have started to enter short. Now this setup is possible at this area here, Another possibility is the fact that the market could actually break this area successfully and continue lower. That rule with respect to the number of waves, it works 9 out of 10 times, I would say, but there are times when the market will continue beyond that number of waves and continue higher or lower in the direction of the existing trend. But usually it does not last for a very long time, and the market will eventually fatigue, so to speak, and we will eventually usually get this sideways movement and this sideways pattern. Now, when that pattern appears, the market will either provide us with another signal to indicate the continuation of the existing trend, or it will produce a signal to indicate that we're actually going to be changing direction. So if this appears, if the market comes down to this area here and produces another bearish signal, then it has a high probability of actually leading to a continued downtrend. But if this scenario that we see, if this pattern actually forms at this area here, then the bullish scenario is going to be equally possible. And we could see a break of the resistance boundary formed at this area here, which leads to a rally above this downtrend line and above this uptrend line as well to resume the overall uptrend. So that is a possibility that we could see for the bulls if this formation takes place at this area here. If it takes place at this area, it is technically still possible, but the probability of that becomes lower the farther away we get from the trend line. So right now we could see the market break this trend line and continue lower, or we could actually see the market move sideways and then continue lower or move higher. Another possibility is the fact that we may not even get a break of this counter trend line. The market could simply head higher above this downtrend line right now and then provide us with another setup at this area here that is followed by a signal to continue higher. So we may not even have to consider this possibility here. But nevertheless, in these scenarios, all of these possibilities have to be taken in consideration until we see a clear setup from the market and a clear signal. So generally, that is what we expect when the market is in this situation. We can have the market threatening to break a major trend line and start a new trend. But if certain elements with regards to this new trend basically prohibit the market from continuing below that major trend line, then we'll have to consider the possibility that the market could actually continue in the direction of the existing trend. So let's wait to see what takes place and take it from there.